Ladies and gentlemen, Anthony Noto might have just had the best fireside chat he has ever had with JP Morgan Chase. Thank you so much, JP Morgan. We really appreciate it. But Anthony Noto has leaked a lot of things that potentially he has not said either on 10Qs or any of the other conversations that he's had live with other, analysts, reporters, or anything along these lines. So in this video, I'm going to be going through every single point that is not public information before this point, the things that have really stuck out. But your time is very important to you, so let's get started. First off, let's go over all the points that he covered in SoFi Bank in general, okay? This is either the checking and savings products, invest products, or even, all the lending side. He said right now their number one focus is to drive primary banking relationships, for which they're actually doing this through direct deposit. We already knew this. What we didn't know is that he actually specified that the majority of all of this growth as of late is still from large incumbent banks like the Wells Fargos, the JP Morgans, and everything like this. So funny that he's talking to a JP Morgan person about this, okay? But he actually said all the regional banks that are actually collapsing is not actually that big of a part of, SoFi's growth right now. It is still just from the incumbent banks. Now, he did say that they're still on track to do $2 billion of deposits in Q2 of 2023, and still around 90% of that is all from direct deposit users. And funny enough, Chris Patel, one of the people that actually is on the SoFi Weekly podcast a lot of the time, is actually going to be one of those members this week. So he just said that he's going to change his primary banking relationship over to SoFi. It's amazing to hear. He actually would be falling into this category of the 50% of people that in the first 30 days of opening a SoFi Money account actually transition over to be a direct deposit user and kind of benefit from all those different things from, better pricing on lending or even the 4.2% interest rate that you can earn in your savings account. Anthony Noto also specified that this is much higher, the 50%, than what they actually benchmarked before they actually got this bank charter of only 35%, which is more of the norm of what they see in the markets. SoFi is actually seeing 50%. So he just said because internally the cross-buying is so strong on this product and their actual ability to, use those deposits to help fund their loans, that all of their focus has been on pushing SoFi Money products. All he's saying is that the flexibility here compared to their competitors is insanely huge. And no matter where the market actually goes, they can just change it to actually, change with the markets and then benefit from wherever things are going to go. Higher interest rates, SoFi Money, and personal loans. Lower interest rates, student loans, home loans, invest platform. Okay, so we just change those levers no matter how we're actually going to deal with things. And whenever it comes to personal loans, Chris Lapointe did actually point this out in one of his recent fireside chats, but I just want to say it again. Anthony Noto pointed out that if you have a credit score below 680 points, it's just an absolute cutoff. They do not deal with you under those numbers. But anything above those numbers, they actually don't base it off of your FICO score. They actually base it off of your cash flow, how much money you're bringing in and where you're spending it. If you have the ability to actually afford this loan, that's what they're basing it on. This is why the push for SoFi Money and SoFi Relay are so important, because that actually helps show your transactions, where you're putting your money and how you're spending it. SoFi Relay is this amazing product that actually allows them to see into your transactions from other institutions. Not a lot of banks have that power. Also included in the conversations over their personal loans, they did actually state that their personal loan credit standards are even tightening even more. And Anthony Noto got very specific, saying that they use the Moody's S3 forecast, which also assumes a 5% unemployment rate by 2024 and a 2.5% GDP decline. So this is how they're actually forecasting what their expected defaults and their expected amount of personal loans going forward is. So actually specifying this for, us investors, now we can actually track this and see what are they going to do going forward. And whenever Moody's S3 forecast actually changes, well, the SoFi Invest Club and all the analysts are actually going to have, a little bit of an advantage whenever we see those numbers come out immediately. Anthony Noto also said on an annualized basis or on their life alone losses, okay, that they are all below their benchmark rates of what they're actually looking out to be. Their threshold is about 7 to 8%, where on their life alone losses, they're actually only averaging about 3% over the duration of about a year and a half, which is on average. And they continue to innovate and just make these products much better than how the incumbent banks might also deal with your personal loans. Think about it like this. Anthony Noto even said that whenever he got into the business, they were above standard by issuing personal loans in less than 7 days. Today, it's less than 2 days. That's the convenience. If the pricing matches as well, that's a beautiful client that we're able to bring over. and it's easily funded into your account, especially if you are a direct deposit user. You get the 0.25% discount on your loan as well. And it's all seamless within one single app. Now let's talk accounting, because this has been one of the biggest things that has happened this quarter, is that people are getting a little bit worried about how SoFi is doing their accounting. Now, not a lot of banks do this. SoFi is actually quite rare in the idea that they use fair value accounting for their loans. And it's actually not great for SoFi, but it is great for investors because of how transparent they have to be. They can't hide all of their skeletons behind the closet anymore, like what they did with Silicon Valley Bank, right? All the skeletons got sort of piled up in the closet, and then you really don't get to see that until they all come piling out, and it actually leads to potentially a collapse or bankruptcy. Those were all the losses that were building up that they didn't need to mark to market. SoFi does not have that flexibility at all, which is maybe bad whenever it comes to the management. If things are going bad, investors are going to see it. But as investors, that should be a sign of relief. For example, they were talking about delinquency rates. After a loan is actually marked delinquent of just 10 days, they have to mark down the actual loan by 35%. Okay? And then after 30 days, it's marked down by 70%. After 90 days, 90%. And then after 120 days of the loan being delinquent, it is marked off completely. This all happens in real time, and it allows investors that once the quarter is actually released, those are the numbers that you're seeing for March 31st, for example. The way I see it, it's leaving all the accounting tricks at the door and just really looking at the company for how it is. This is smart, and I believe that although they're being punished for being so transparent, it will actually be to their favor in the long run. But we are moving on to the tech platform, where a whole bunch of things were said that I cannot believe we get all of this information in a single 35-minute chat with Anthony Noto. Now, we talked about how Galileo and Technisys coming together has been a massive benefit. That's something that we've already assumed, but didn't 100% know, right? But supposedly their pipeline is getting quite strong. We'll talk about that. But what they didn't say, or what they did say, is that they were in talks with a dozen plus large financial institutions that just simply, they were not in talks with at all. These people wouldn't even pick up the phone. But now that we're able to offer the cloud-based solutions for their core and ledger processes, and then also offer all the systems for their payment processing, this is a combination of technologies that just wasn't offered before. That bundling of prices is something that we can come to market with at a very compelling offering that just simply hasn't happened before. Listen to this, okay? He said the technology platform pipeline has been the strongest they have ever seen since he's been at the company. And that the TCV, the total contractual value, is the highest Anthony Noto has ever seen. Now, there's one caveat to this. The way that they're actually processing these systems over to Galileo and Technisys is going to be a little bit slow to start. And what he said is most people are choosing to just port over their new customers, see how the trends are going to go, and then start to bring over their old customers. So even if we do catch a large incumbent bank, we still might only be getting however many new customers they actually start to get, and not the large stockpile of old customers that is really the amount that we want to see transfer over. So we said for the next couple of quarters, till about Q4 to Q1 of 2024, is that obviously it's going to be quite slow, modest growth, and then start to ramp up, hopefully. He didn't say the word hopefully. I'm just saying that because anything can happen, right? But also, in SoFi's own experience, what they're talking about is using a lot of Galileo's products, obviously for free because it's vertically integrated, right? But things like Connecta, which was supposed to be their AI chatbot, has been seeing massive success in terms of reducing the cost per contact in terms of their customer, their customer interactions, and then also increasing customer satisfaction and a myriad of different benefits that he spoke about, which is really helping not only their customers, but also bringing it to SoFi's own banking app as well. They also said that their payment risk platform, which Galileo is starting to offer to other systems, is also on SoFi's platform now. So we're really starting to get vertically integrated like crazy right now. So that's very exciting. Then there was a myriad of points that he said throughout this conversation that I just couldn't put. It was just extra points that I wanted you guys to hear. He said that they're really excited about the SoFi travel product, but that's really not, the full extent of what they're excited about. They're excited about the fact that they can bring this to event tickets, entertainment tickets, sport bookings, and a whole bunch of other things with other companies that they're able to partner with. It's not the first time a bank and a platform have ever integrated before, but hopefully SoFi will make it so large and so seamless to a point where maybe a customer has not had this seamless of a product interaction before. One of the things that Anthony Noto expressed a lot of excitement for is just how fast the financial services platform is actually growing. He said it's absolutely exploding and really taking that need for diversification away from lending And that's really showing what's happening in financial services. So every quarter, practically every month, financial services is taking more of their diversification, their pie of total revenue, away from lending and more towards financial services. That doesn't mean lending's not growing as well. It just means that financial services is growing that much faster. Cross-buy rates are still super high for SoFi Money products and SoFi Relay, that they want to continue to still push those products right now. What he said was that to acquire a customer through SoFi Relay, or especially through, SoFi Money, is that the cost is around $350 per person. He didn't say that on the actual call. We just know it because we track, the actual customer acquisition costs. But what he did say on the call is that if they just acquire a lending customer straight up, it's about $700 to $800 per person. This is cutting the cost in half if they're able to cross-sell from a SoFi Money, individual over to a personal loan. That will impact the actual amount of profits that they can keep from those loans if they already came from SoFi Money. He did say that he's very excited about Wyndham Capital finally having a conversation about it. He said that it is allowing them to get ready to start scaling their home loans again, which should happen very soon. We might see it at the end of Q2, but potentially, or I should say probably into Q3 as well. Now, I kept this point because it is by far the most exciting point, okay? Between 2024 to 2025, members could exceed, after they actually hit profitability and start to actually want to go to scale, between what he said, 800,000 new members, potentially up to 1 million members per quarter. This could be unbelievable, guys. I just had a conversation about this, covering this, of what potentially could be just in the matter of less than 2 years is when we really start to go back to growth after we hit GAAP profitability. We talked about this with StockGoat, Kyle from the StockGoat YouTube channel, just, the other day, earlier this week. If you guys haven't seen that video, go check it out. But aside from that, guys, I really appreciate you guys seeing this update. All of the points are unbelievable. This is all new information we're really, really excited to see. And I cannot wait for SoFi to be offering 1 million new members per quarter. Thank you so much for watching. Appreciate your time, and bye for now.